Hello traders, welcome back to the Forex Gig. In today's video, we are going to be talking about a tool that can help you filter out market noise and focus on clear trends, and it's called the Renko Scalping Strategy. In today's video, we are going to look for a method to simplify your trades and give you a precise entry and exit point. The Renko charts might be exactly what you need. By the end of this video, you would understand how to set up your Renko charts, identify trends, and use them effectively for scalping in the forex market. So stay with me until the end of today's video so that you will learn how this strategy can work and improve your trading results. Now, what are the Renko charts? They are unique type of charts that focuses solely on price movements rather than time, unlike your traditional candlestick charts, which form new candles based on time interval, like 1 minute, 2 minutes, and 5 minutes. The Renko chart creates new brick only when price moves by a certain amount. This means that if the market is quiet and price isn't moving much, no new brick will appear. Each brick on the Renko chart represents a fixed price movement. Let's say 10 pips in the forex market. A new brick would only form when price move either up or down by that amount. If the price move up by 10 pips, a new green brick or white brick will be formed if you are using a white chart, but I'm using a green chart, so I will make use of green bricks. So if the market move up by 10 pips, a new green brick is added. If it moves down by 10 pips, a new red brick is added. This structure makes the Renko chart very effective at filtering out small insignificant price movement or noise. They allow you to focus on the larger trend and clear reversals, which is particularly useful for scalping strategy where timing and precision are key. As you can see, we have to set up our Renko charts in such a way that when it moves 1 pip, you set it up by going to your settings and you set up your Renko chart according to the traditional way. You put the box size however you want it to be. Alright, let's know how we can step by step apply this scalping strategy to our trading, our day-to-day trading lifestyle. Now that you understand what the Renko charts are and how they work, let's dive into a step-by-step guide on how to use them effectively for scalping in the forex market. This strategy is all about identifying trends and entering the trade at the right time or at the right moment and managing your risks properly. First of all, the first step is by setting up your chart. You would need to set up your Renko chart on a reliable platform. Most reliable platforms are either the MetaTrader 4 or the Trading View. They all support the Renko chart, and I'm on this platform. This platform I'm using is called the Trading View. You have to choose a brick size that suits the currency pair you are trading. For most forex pairs, a brick size is about 10 to 5 pips. They work very well for scalping. Smaller brick size, the more effective or the more sensitive the chart will be, they will make price change, which is ideal for short term trading, for scalping. So the smaller the brick size, the more sensitive charts will be. We have to make sure we use at least 5 or 10 pips brick for this strategy. The second step is identifying the trend. Once you have set up your chart, the next step is to identify the trend. The Renko chart makes it easier for you because it filters out the noise. By filtering out the noise, it shows a clear direction at which the market is trending towards. An uptrend is indicated by consecutive green candles. As you can see, an uptrend, when we are trading in the up direction, we can see consecutive green candles. As you can see, consecutive green candles. While in a downtrend, You can see consecutive red candles, as you can see from the chart. In a downtrend, we can see consecutive red candles. Sorry, red bricks. These are bricks, not candles. Red bricks. You want to trade in the direction of the trend. Buy during an uptrend and sell during a downtrend. So these are examples of my downtrend and my uptrend by a consecutive candle. For the uptrend, you have to see a consecutive green bricks, while in a downtrend you see a consecutive red bricks. Now the step 3 is knowing how to enter your entry signals. Now that you have identified the trend, now that we have identified the trend, it's time to look for your entry signal. This key here is the key here is to wait for the confirmation before entering a trade. In an uptrend, enter a long position when a new green brick has formed after at least one red brick. I repeat, in an uptrend, you would have to enter a long position. When you see the market is trending in the up direction, you have to enter a long position when a new green candle, a new green brick forms after at least one red brick. This signals that buyers are regaining strength. While in a downtrend, after we can enter after we have seen at least one green brick. So if I'm to enter this trade in this downtrend, after if we are certain years that we are trending in the down direction, after we see an opposite brick like a green brick showing that yes, there is an exhaustion in market, we would enter after we see an opposite brick candle brick an opposite brick would enter a sell trade at this area. While in a buy trade, we would enter once we see an opposite we enter when we see at least one green brick. So one red brick, once we see one red brick, we would enter our trade. This is how we enter after one red brick. Now the fourth step is also by using support and resistance level. The Renko chart makes it easier to spot support and resistance levels because they filter out smaller price movements. These levels are crucial for determining where price might reverse or break out from. So we look for areas with multiple bricks that have reversed in that direction. These are likely key levels for support or reversal or support or resistance area. So this is a support, this is a resistance area. As you can see, this is a resistance area. There are a lot of resistance and support areas because the Renko chart makes it easier for us to spot them. This is a support area on the chart. Now the fifth step is to always consider your risk management. You know that we are making use of this strategy for scalping, so no scalping strategy is complete without proper risk management because scalping involve quick trades with tight stop loss. It is important to protect your capital. You have to set your stop loss just below or above the previous brick for minimal risk. Let's repeat. I said because we are scalping, we need to make use of a proper and a tight stop loss. Now we have to set our stop loss above when we are selling. When we are buying, we set it below, and this stop loss should be set below or above previous bricks. Let it be if you enter a trade, let's assume we enter a trade on this brick, your stop loss should be below the previous brick. It is a tight stop loss. We can also consider using trailing stop loss. As the trade move in your favor, you can lock in profit without risking too much. Alright traders, we have come to the end of this video. If you found this video helpful, make sure to like and subscribe to the channel, and do not forget to turn on the notification bell so that you wouldn't miss out on any updates. Thank you for tuning in, and until next time, happy trading.